For today's business brief, we're joined by the Chief Market Strategist at InvestSMART, Evan Lucas. Evan, let's start with the markets overnight. How did Wall Street go in the back of what is, ongoing uncertainty in terms of trade relations, not just with China, but Mexico and others?
Yeah, look, for the last 2 days, actually, Kieran, we've actually seen the US markets pop up. Now, I need to probably put a caveat on that. The US markets have had a torrid time over the last 12 weeks. So basically, end of last week, they got to their lowest level of the year. They'd been contracting quite significantly. The US-China trade war is very much part of it. And we saw on Monday that the impact on the NASDAQ around what is currently going on inside of that, and then also thrown in the issues around the antitrust that's currently being brought on, probably to Google and also to Facebook, was all sort of culminated. But the reason it's rallied over the last day and a half is that we are now talking not just about our central bank and what the RBA did on Tuesday, but we're also talking around what the US central bank could be doing. And the markets are now looking at the idea that the Federal Reserve could cut rates twice in 2019. That's an astounding thing to be saying, considering in January they were still forecasting a possibility of 4 hikes in 2019. So the shift in terms of overall look, the outlook for the US economy, the way that they're currently translating is an amazing thing to see. Now, we'll need to put a bit of a caveat there. They had the best unemployment rate they've seen since the 1960s, the best wage price index they've seen in around about 25 years, and they still have inflation. So who's right? Still a very interesting question, but there are certainly growing suggestions across the globe that central banks are going to start having to cut rates like they have already started here in this country.
Evan, bigger picture, how is our economy doing? Because, record low interest rates, a new record low, probably tells us not so well. But are people starting to feel the lack of growth or slower growth than predicted?
It depends who you ask. And it's a very good question because it is very hard to point that out. So why I say that is that, look, if you listen to the RBA, they're actually glass half full. Yes, growth yesterday came in at the lowest level it's been since the GFC. But the day before that, we had a current account balance that we haven't seen since 2003. And realistically, if you want to look at it from another point of view, the federal government is probably now in surplus with what we found out there. In fact, we don't have to import capital anymore. But employment is now starting to become an interesting scenario. So unemployment is ticking up. We're at 5.2. It's probably likely that over the next 2 months, we could even get to 5.3, worst case 5.4. That is showing strain. Consumption is down. But the biggest issue is the household sector. Household consumption, household savings rates, etc. They were the numbers yesterday that really stood out in the GDP and why you are now seeing what's going on at the RBA moving the way they are. They are slowing at quite a rapid rate and don't look like actually showing signs of growth anytime soon. Will we fall into recession? I don't think so. If you look at government expenditure, still booming ahead. If you look at net exports, it's still doing very, very well. So it will paper over the issue there. But there is no doubt the individual person is starting to really tighten their belt.
Yeah, and the RBA, while, quite positive, at least sanguine about the outlook, they are begging for a fiscal reform.
That's the best way to describe it. There is no doubt. I've not seen a central banker as so direct in a prepared statement as Philip Lowe did on Tuesday, state very clearly that he needs and wants to see fiscal policy be part of this whole story. And the fact that he actually straight out said that we need fiscal reform for structural movement in business sectors to basically create, in their words, animal spirits, as they've always alluded to, around growth, around employment, helping with grants, looking at also getting private and public joint ventures, all of the above would be exactly what we need. Now, we do have infrastructure spending coming, that's clear. And as I said, GDP was very much supported by government spending. But there are other parts of the government sort of fiscal policy setting that really need to be reviewed. And yes, we always talk around the surplus. Both sides of politics are guilty of that. We may have to actually start talking around the idea that we can probably back away from that in the interim and start to actually see some of that money flow back in. Government borrowing has never been cheaper than it is right now.
Perhaps wishful thinking, Evan, but we will see. Thanks so much for that. We'll see you soon.
Thanks, guys.